What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money investing in fractional real estate online, as usual. Today, I'm going to go over my February performance for my ARK7 portfolio and actually just talk about their overall portfolio performance a little bit. They put this report out every month around the time that they pay out dividends. Also, before I forget, they pay a bonus if you make a certain size investment after, within 3 days of the dividend day. It doesn't pop up for me because I already put in an order, and I guess they assume, okay, I know about it, I put the order in. But that's one of the things that I'm trying to take advantage of on a lot of these fractional platforms is the free money they're giving for early investors. ARK7 does quite a bit. They do, I got my $50 for my first $1,000. Was it $1,000? I don't think it was, actually. I don't know, $50 for whatever the first investment is, and that's what I have a link in the description of this video for. And then I got $30. That might have been for a referral, but then they give you $80 for making, I think, an $800 investment after dividend day until you hit a certain threshold. And then after that, it's a little bit less. And then, so they have like a couple of steps. But so for a while, you can get basically a little bit of, extra money on each investment. And I think it makes a big difference when you're really doing your math on how you're doing on some of these deals. Especially on ARK7, I was kind of sleeping on that for a little while. One, because I just... until there started to be some real discounts, I wasn't too excited about this platform, but it's getting better and better. And so this is one that I have been looking harder at. Before I forget, please like and subscribe. In the description of this video, I have links to all the places where I'm currently investing in fractional real estate online. Please do your own due diligence on those platforms. Don't just invest there because I put some links up. Also, do your own due diligence on any properties that you see me talk about. Just because... just because I'm buying them does not mean that they're a good deal for you. It doesn't even mean that they're a good deal for me, right? I mean, I could be missing something. So please do your own due diligence on that. Also, in the description of this video, I have a link to the Discord channel that I set up for all of us to talk about fractional real estate investing. We have literally hundreds of people in there now. A lot of helpful people sharing thoughts on different platforms, different properties. We're working together to do due diligence on certain properties. So it's really working out great. Feel free to join that. If you do, be aware of fake people that look like me that will reach out to you in the DMs. Those are never me. I'm never trying to sell you anything. So just keep that in mind, and please report them if you see that. Okay, so back to how's ARK7 doing? I mentioned I was never really that interested in them until they put out some of their, until some of their secondary market deals had some real discounts. And why is that? Well, look at this. They're talking about, we had a 4.74% annualized dividend return. That's the average across the whole portfolio. For me, that's just really low, right? I mean, when I'm investing in real estate, I'm hoping to do better than that. And I'm going to show you my portfolio's performance after I go through the portfolio as a whole. Spoiler alert, I'm crushing the average. And it's, not because I'm a genius. It's pretty easy to do it, and I'll explain what I'm doing if you haven't been watching my videos. But then they mentioned, okay, we've got 3 properties that have their 3 best properties are all in the 7s. And so if you remember, I've been pretty critical of, I like to compare across different platforms. I've been pretty critical of Mogul for having, a lot of their recent deals in the 7s and 8s as far as their predicted yields. Now, they have had a lot of properties where, they've had 0 yields. My portfolio right now with them, my average yield is actually, I think, around 6%, which is still better than the average yield of ARK7's total portfolio, but it's worse than my average on ARK7. So I thought that's kind of interesting that I'm already doing better from a yield perspective on here. And when I compare the two, I might have to switch what my favorite platform is when come to think of it. But when I compare the two, this is an unlevered yield where Mogul's is levered. Now, there's some pros and cons to that. And I talked a lot about leverage in a video a couple nights ago. It's the one on ergodicity. You could check that out if you haven't watched it. But so obviously, if I can achieve the same yield without leverage as with leverage, it's a safer yield. But yield isn't the whole story with investing, right? And actually, across my, for the 20 years I've been investing in real estate, actually going on 21 now, most of my returns have actually come from appreciation, not from yield, right? Not from the cash flow. Appreciation is where you really get wealthy in real estate. And having that levered appreciation is, will make it so that you significantly outperform an unlevered appreciation if you have the same level of appreciation in your property over time. So, it's yet to be seen which ones will actually be more profitable until we go full cycle on some of these. On the flip side, though, on ARK7, I'm currently buying at discounts to what I believe the real world value is, because in their, not their IPOs, when they initially release things, I don't think they're getting any kind of discount at all, at least not from my perspective. Maybe there's some exceptions for some properties, but I feel like overall I'm paying more than I'd want to. But on their secondary market, there's opportunities to get pretty decent discounts to the real world value as far as I see it. And so, the combination of getting a fairly strong, fairly strong unlevered yield and also getting a discount, I might be, we might end up better off than getting a similar yield with a levered appreciation, but no discount, and maybe sometimes a premium, right? So sometimes I think we have to. There's a premium that we're paying on Mogul that we're going to have to overcome. So there's a lot to unpack there and think about. Obviously, from one property to the next, things can change. On ARK7, those deals really just exist when, it's not like the property pops up and I can buy it whenever I want. It's when there are discounted shares. Although the more time I spend on the platform, the more I realize there's discounted shares in properties quite a bit. So, okay, that's everything about, their total platform or their total return on the portfolio. That, they point out some of their highest yielders. I think this is a good number to look at. Their occupancy is 93.59 across the whole portfolio. That's really strong occupancy. I'd love to see that compared to Lofty's occupancy across their whole portfolio. I have to imagine that it's way better than that. I don't mean to just pick on Lofty all the time, but whenever I think about, okay, you have a portfolio that is curated versus one that's not, obviously it's a lot easy. The performance should be significantly different, right? And that's why most of the properties on this platform have a tenant and are actually performing. Okay, let's see. Yeah, they're talking about, okay, they have a bunch of short-term rentals that are doing well. I actually have some of this Atlanta C10. I believe that's the one I have. There's a bunch of condos in the same building that are all being operated as short-term rentals. I think, those deals seem to look, they look pretty good to me. I have an open order for some of those that were fairly decent discount. When they give us this dividend summary, I think it's kind of silly. They tell us the total dividend because, we don't own the whole portfolio. That number is pretty meaningless to me, but obviously their average rate of return, their average dividend across the portfolio is pretty interesting. You can see how that's trended over time, and it's, obviously right now it's looking stronger. Well, the total number is going up. I mean, this is not the, what you have to look at here is the annualized dividend rate across the board. I mean, that's what I think is the most interesting. And you can see that's actually moved up and maybe is the highest that it's ever been. We can't tell exactly, but it is, close to 5%. If you look at their best performing deals, they're actually looks like it's come down a little bit, but it's still right around that 7.5%. They tell you, okay, we have some new leases signed. We've got these, several of these Atlanta C10, C5, C6 all doing very well. They have some renewals. And I actually I'd much rather see renewals signed than new leases, right? Because it's a lot cheaper to renew your current tenants than it is to sign new leases. Okay, only one that they're talking about that it's turned over and looking to relist, or is being relisted for rent. It's kind of interesting though, if we only have one, do they have so few properties that one is creating the whole vacancy? I guess they must. Yeah, I mean, I get, it doesn't take, I don't think that they have that few. I'll have to look, but that's kind of interesting. And let's see, yeah, featured investment opportunities. They always give you these ones that they think I don't know how they pick them actually, but if anybody knows, put that in the comments or jump in the Discord and share with the group. How are they coming up with their featured ones? Or these, because I mean, these are clearly not the highest yielding ones. Maybe they're ones that have a lot of shares available. I'm just not sure. They're definitely not the ones with the biggest discounts, because I look for those a lot. Let's see. Trading market growth. I mean, I think this is kind of interesting to see that, like, there's more and more trading on this platform. And I think that comes from there being more discounts than there ever have been. You can see, I mean, this is all sort of interesting information to me. And then this, performance as far as price changes go. I think this is insane that they have some that have moved up 30%. If you look at, I think we did this last week too, is looked at the whole portfolio. Oh, is it going to have logged me out? No, it didn't. Okay. I'm going to look at the portfolio after. Well, let's look at it now, and then I'll go back. Oh, no, that's not what I'm trying to do. I want to look at their marketplace, right? And look at percent off of IPO. So, okay, this one's, you've got 1, 2, 3, 4 properties that are selling for a premium to their IPO price, and then literally every single other one after that is selling at a discount. So, they highlight those 3 that are, let's see, they highlight those 3 that are, and they're saying like, oh, these are our best, these are our best ones. But yeah, there's only 4 that actually went up. So, of course, the 3 of those are your best. But anyway, it's just a really good example of why, for me, the strategy on almost all of these platforms is to buy discounts on the secondary market, if they have a secondary market and those discounts exist. Speaking of secondary markets, hopefully everybody's prepared. I think it's like 3 days before Arrived does their next trading window. So you want to be open for that. If anybody has any insights they want to share about, how they're getting ready for that, I'm going to try to get a video out probably earlier this time, once that market's open, about what's available, or, if there's anything interesting to share. Obviously we're competing for the best deals on that platform. So I understand some people trying to keep their info close to the vest on that one. I don't really know where that expression comes from. I said it the other day, or heard someone say it. I don't know. And it sounded weird to me. But anyway, I understand if some people want to keep that stuff to themselves at the moment. Let's jump into, okay, how's mine performing, right? Well, my total return, my annualized return this month, 7%. So what did I say their portfolio average is? 4.74%. So I'm crushing them, right? That's pretty exciting. 7% isn't an amazing yield. It is better than my Mogul portfolio return currently. It's better than, I think, actually, every platform. Maybe my maybe my collab return is actually better than that. I think I have 7.5 in the one property I have on there. Obviously, there has to be some risk adjustment that goes on, right? Like, you can't just look at your yield and think, okay, that's the same, right? This is an unlevered return on a platform that seems to be one of the better run platforms. So that's obviously that can change, from one day to the next. There were people that were excited about Landa for a while before it went under. Lofty was a favorite of a lot of people before it really just, all the cracks started showing. So, just because this seems to be doing pretty well, you have to keep that in mind, right? I mean, that's why I'm not putting a huge chunk of my net worth onto any of these platforms yet. But this is one that I'm going to spend more time paying attention to, putting a little bit more capital on. I'm definitely going to do it slowly as ARK7 gives me these deals every month. I think that'll, I'll probably just invest around that amount, unless there's just some screaming deal that pops up in the meantime. I mean, getting that extra, 10%, 8%, whatever it ends up being. I know they give you 10% of 800, but I did an order for like a little more than that, so it gets reduced. But anyway, so what do I have? So I have the Atlanta condo that I was talking about. This is C8. Yeah, I think I thought I had a piece of C10. I think the order I have open is for C10. C8. You can see, okay, this looks like 7.98%. That's higher than any of the three that they mentioned. How is that possible? These are their three best yielders. Well, it's because I bought this at a discount. So even though it's not one of the best yielders, my yield on it is higher because of the discount that I bought it at. This SoCal one, again, that's doing pretty well, but again, this is because I have a decent discount. The only one that is a little bit sad is this Tampa S10. I bought this one more than anything because not for the yield, but because it was a pretty deep discount to what I believe the real world value is. And so my thing, yield is temporary, basis is forever. I'm trying to make some money primarily on the equity side, and to be able to step into 10%, 15%, 20% equity is, if you can do that consistently over time, eventually you'll just make huge, it's basically free money, right? As long as it continues to perform appropriately over time and we sell it, there's a lot of things that go into it. So when I say it's free money, yeah, there's obviously risk involved. But I'd rather pay 75 cents for my $1 investment than pay 100 cents for it. Depending on what the holding period is, though, I might still be better off with these higher yielders that are not quite as deep a discount. And depending, I kind of go back and forth because over my entire investing career, I've made way more money, like I said, on the equity side, on appreciation. At the same time, I'm getting to a point where I don't want to be doing a lot of active trading and buying and selling, and at a certain point I'm going to have to turn my portfolio into more of just an income focused portfolio, and so getting some of these higher yielders in there will make it easier for me to just do that. Now, am I going to be living off of my dividends from ARK7 anytime soon? No, but I could imagine sometime in the next 5 to 10 years, my dividends from across my whole fractional real estate portfolio picking up the vast majority of my living expenses if I wanted to do that, right? I mean, I'd have to liquidate more things in real life and move some of that capital on here, which over time I plan to do. As once I get more and more comfortable with more of these platforms, as they get better track records, as I understand what to expect. Obviously, I have to start seeing some deals go full cycle at a certain point before. When I say full cycle, I mean like actually, they bought these with the intention of selling them in real life at some point in time. Most of them, I think that's what ARK7's strategy is too. That's crazy that I can't remember that, because that's important, right? Because you could imagine a couple of different things, right? You could imagine where there is just a set holding period and they expect to sell it at a certain point in the future. Or you could imagine something different where they just think, okay, we're going to leave these properties on the platform forever. When you want to cash out, you do it by, you do that by just selling your shares. On most platforms with a secondary market, if selling your shares is the only way that you're going to cash out, you're going to have a real problem. And I think ARK7 would be, the same sort of thing. Moderate high growth potential. I'm trying to see if they mention that. I felt like they do somewhere. If if you're more familiar with ARK7, and I don't know if it's Brosipius or how you say it. I think he's the one with the most experience on there in our Discord. Let me know, what is their strategy, right? Are they planning? Oh, well, this one has a loan on it too. That's interesting. A lot. So maybe they're not all unlevered. It looked like the ones that I own are unlevered. Oh man, am I just giving you all bad info, or are mine all unlevered? That's a good question. Maybe they're not. Maybe some of mine have leverage. Okay, let's see. Yeah, no, I think mine are all unlevered. I think that was one that maybe the Tampa one isn't. Let's look at that one. But yeah. You can tell. I start to get the different platforms confused, the different properties confused. Couldn't remember if I owned C10 or C8 or which one I had put an order in on. And that's again why I constantly tell you, do your own due diligence on these deals, right? Just because you see me talking about it, like, I have a very small portfolio on ARK7 right now. With the addition of my latest order, I'm not even going to have a total of 3,500. I think I think my order's around 1,100 that I put in. So not meaningful at all in the grand scheme of things, and but it is one that I think has become more and more interesting as those discounts show up. And now that I own some that I bought with discounts and see that I can get a decent yield. 7% for my portfolio on here is pretty good. I think the one that I'm buying is going to keep me somewhere around that number. We'll have to see. But that's it. That's how my ARK7 portfolio did in February. If you want to share how yours is doing, I'd love to hear it, especially anybody who's been on here longer than me. Because obviously, I just made my first purchase back in December. Have a long way to go before I feel like I really know what's going on ARK7. And that's it. Until next time, I'm going to keep making mistakes so that you don't have to.